Hey everyone, Mike Sweeney here again with the Nature Conservancy. Thanks for joining us. Continue to stick with us. I'm excited to be joined by four panelists here today to talk about the role of the business sector in helping us save the planet. And I was reflecting on my lifetime, and the role of business has dramatically changed, really. I was born in 1969, and in 1970, Milton Friedman wrote his famous essay entitled "The Social Responsibility of Business is to Increase Its Profits." We went from Milton Friedman in 1970 to Gordon Gekko in the 80s, and suffice it to say that things have changed dramatically by 2021. And we've moved from an exclusive focus on shareholder capitalism to what's known as stakeholder capitalism, and a focus on what's known as the triple bottom line of environmental, social, and of course, economic returns. So the role of the corporation and the business has changed dramatically in that 50 years, and that role of running a company has gotten a lot harder, given all the new constituents that are implied by stakeholder capitalism. So we want to just focus on just one of those triple aspects of the triple bottom line, the role of corporations in saving the planet. And I'm very excited to introduce our panel today. First, we've got Manny Maceda he's the global managing partner at Bain & Company, responsible for all aspects of the firm's advisory, strategy, team operations, across all networks of 50 offices of Bain. And also want to just give a shout out to Bain & Company, which has a terrific pro bono partnership with the Nature Conservancy. We couldn't do it without you, Manny. Second, Mark Hawkins. Thank Mark for joining us. Mark is the most recent president and CFO of Salesforce, largest employer in my hometown here, San Francisco. A major publicly held software company that everyone knows for its amazing customer relationship management software. Thanks for joining us, Mark.
Thank you. It's a pleasure, for sure.
Also excited to welcome Jenna Johnson, who is head of Patagonia, a company with conservation in its core, and a real leader in the area of sustainability. Jenna is responsible for Patagonia's worldwide operations, including apparel, packs, gear, and I am very pleased to say that the Nature Conservancy has a pro deal with Patagonia, and many of us wear your stuff. They're great ambassadors for the company and what we do. And then fourth, I'm really excited to welcome Maya Chorengel, who is the co-managing partner of TPG's RISE Fund, which is a $2 billion impact investment fund committed to achieving positive social and environmental outcomes alongside financial returns. Sounds easy, Maya. Thanks.
Glad to be here.
So I thought I would start off by just acknowledging that the last year was one of incredible innovation. The pandemic drove us to change our business practices in dramatic ways. And of course, there was a huge element of unintended sustainability there. And I would love to just start off with Manny, just because you and Bain Company have a broader view of the global economy. What are you seeing by way of the impact of the pandemic on sustainability in the business sector? What do you think? What parts of it do you think have been positive for the environment, and what parts do you think we're going to carry forward post-pandemic?
Hey, Mike, thanks for having me. Honored to be with this group. Happy Earth Day, all. And Mark, I'm actually in the Salesforce Tower today, so I'm also in San Francisco. And on your question, Mike, you started with Milton Friedman to stakeholder capitalism. Frankly, that trend was already in place even before the pandemic, and the importance of sustainability. And so to some degree, it's accelerated over the course of the last year plus. What I've observed is that it used to be companies were increasingly having, let's call it, sustainability strategies, as opposed to now it's sustainability as part of the company strategy. And that's a pretty meaningful shift. And the reason that's important for most companies, as we've seen with our own clients, and my peers here are some of the most admired companies in the spaces. Number one, regardless of whether you're focused on pure shareholders or not, most companies care about their customers. And customer behavior has changed. Jenna can probably attest to that in Patagonia. You care about your investors. whether it's a public investor like Mark might comment on, or private investors like Maya will. Sustainability is now a key metric in how investors think about investing. Every company I know thinks about what does it mean for our people, our talent. And so maybe I'll speak to that, not just as a consultant to large corporations, but as a CEO myself. So for all of us who want to do the right thing for our planet, to the extent we have a business where we need to attract and retain employees who'll make a difference, sustainability has really evolved how we support and enable our teams. In the beginning, it used to be you encourage your teams to go support Earth Day or do community impact days. You just try to find good citizens, civic duty. And then you move to, and Salesforce, one of the first examples, can we donate some of our services, as we've done pro bono to important NGOs and organizations, like the Nature Conservancy. So in our case, as a typical company, we allocate 2% of our product to good causes to have social impact. Both of those are important things to move the needle, but to really move the needle as corporations, it's not just the 2%, it's not just what you do in your spare time. The 98% of what you do commercially has to have some element of this. And so what's happened over the course of the last few years is that, for us, a core product is helping companies build strategy. Well, we have a sustainability practice. Large corporations are now engaging us to help them think about how do we meet the needs of our customers better, who care about sustainability, meet the needs of our investors in a responsible way, attract and retain our people. And so that's something that has just accelerated. And the pandemic period has created some weird dynamics. It has all its challenges. Our own carbon footprint has dramatically reduced because we're not flying to clients. We're doing meetings this way. And so a lot of us are now thinking about what happens next. And maybe I'll make a last comment and turn it over. The interesting about stakeholder capitalism is there's a lot of initiatives where we're working directly with our competitors, which, in a world of historic competitive advantage, I spent some time this week comparing notes with one of my direct competitors, and we're normally viciously competing with each other. But we're trying to compare notes. How are we going to meet our net zero carbon by 2030 targets? What have you figured out? What have we figured out? That's not an antitrust discussion. It's just a good dialogue that companies are having. And so I'm quite optimistic that this will continue, hopefully post-pandemic. Welcome my peers to comment.
Manny, I imagine a big part of the carbon footprint of Bain & Company was all that air travel. What do you think about that going forward?
Well, I'd say every company is thinking about what is the new model, what is the new normal, and what are the sets of things that you can do via whichever platform you choose. And so we're evolving. I'm sure we're also social beings. Homo sapiens is one of the creatures of this planet too, and we can't just all stay in our homes doing work this way. So there's going to be a right balance, whatever hybrid model we want, and we'll figure out. We'll probably come into places like Salesforce Tower, a few days a week and in different models. But there's going to be a lot. I just think there will be a lot less, and it'll also be responsible as every company thinks about our own carbon footprint when we do travel. And my friends in the airline industry know this. We'll think about, well, are we traveling sustainably? Are the airlines also doing their share to reduce the carbon footprint? But lots of open questions, as you might expect, and know how it'll play out the next few years. But I don't think it'll go back exactly to how it used to be circa 2019.
Interesting. Any other thoughts on sort of what's been called the great acceleration over the last year with respect to its sustainability impacts? Mark, your company recently decided that they were going to go all virtual. I look every day from the top of my street down at that giant tower, and I imagine it empty.
Sure. Well, one of the things I would say, Mike, first of all, thank you guys for the opportunity to be here. What a wonderful chance to just amplify a really critical need that we have to really address climate change tangibly and quickly. I would also agree with Manny in the sense that the world, we've learned a lot. And obviously, notwithstanding the hardship and the suffering and everything through this pandemic, and my heart goes out to every family that's been impacted by, this in every way imaginable. As we look at the future, I do think the way we work is going to be different. I think we will have people be anchored to major real estate locations, but they may not spend 5 days a week there. They may spend 2 days, they may spend 3 days, depending on the nature of their job. They may come in once a week, once a month. I think for every business around the country, some people have to be there and on the front line every day. And there's probably no one size fits all, but I think virtually all sizes are going to likely change a bit because we've explored what's possible. And this is just another element of society going through a digital transformation. And so I do think it'll be a hybrid, is what I would say.
Yeah. Jenna, Maya, any reflections on this past year? What it's meant for?
I would touch on a couple of things. Manny brought up a lot of really great points, as did Mark. For Patagonia, I think we can't, all of us as business leaders have really seen in the last year that this has been a really important moment for reflection and for really sitting and understanding what matters most to us, and certainly the climate crisis being at the forefront of that. And for Patagonia, we've taken a lot of time this last year to really understand where we're uniquely served to serve in trying to save and restore planet Earth, and what that means. And in places where we're not uniquely skilled to do that, how do we collaborate with others in our industry, as Manny mentioned, or others in different sectors that we can really work with, because certainly this is going to take collaboration amongst so many of us. And the idea that this becomes, that sustainability is a competitive advantage is completely contrary. That we should not be thinking of sustainability as a competitive advantage. This is a shared advantage that allows all of us to have responsibility as a business on this planet.
I would just echo everyone's thoughts. I think that we reached an inflection point in the past year, both with respect to planet, but also with respect to people. And the urgency of the actions that need to be taken has really come home to roost, number one. And number two, to Jenna's point, it's a combined effort between individual everyday people, corporations, policymakers and government, the big philanthropies of the world. And what's been really heartening to see is the reaching across, different sectors of society and business to come together to make a change, both with respect to the environment, and with respect to some major social justice issues around the world, whether it's, Black Lives Matter in the US or, the refugee issues globally. So the moment is ours to take now as a collective group, and I think that's cause for optimism.
Thanks. So, one of the things I think about a lot when I think about corporate sustainability is just kind of planning horizons and moving from obviously quarter to quarter kind of thinking towards, decade to decade thinking, if you think about sort of reliability of supply chains, raw materials, all that kind of stuff. And, Jenna, Patagonia's, as I understand it specifically, is going as far as 100-year planning. I don't know if I got that right, but you're taking it all the way and looking really long-term about planning horizons. Tell us a little bit about how that impacts the way your business thinks and operates. Is that working out, or, how do you even get your head around that?
Yeah, 100-year planning is really just a philosophy around thinking about wanting this business to survive and needing to have impact in order for the planet to survive in order to have a business on. As the conservationist David Brower says, there's no business to be done on a dead planet. So looking at finding solutions that can really support that 100-year vision. And we're about halfway through about what we consider a 100-year experimental journey at Patagonia. And this last year has certainly heightened the tension of urgency around the climate crisis. There is an absolute need for action immediately and urgently. And yet making sure that we're putting in place solutions that allow for business to survive for 100 years and this planet to really thrive. And that tension is incredibly complex and difficult at times, but so critical, because otherwise we get into constant fixing and refixing mode if we're only putting in place short-term solutions. So, for us, some of those come back to just looking at nature-based solutions and how we can learn from nature and put in place solutions that are really natural and draw from inspiration and knowledge from the world of nature and the way that it has survived and thrived, and be able to support that as we move forward, and thinking about how our business can really coexist with nature in that way for that long-term vision.
And that's terrific. And so, Patagonia is a privately held company, and so perhaps doesn't have to deal with sort of the demands of Wall Street. I'm interested, Maya, from the investment perspective, how do you think about the challenges of sort of the conflicting incentives for companies that do want to do such great work as like Patagonia is doing, but then are also just trying to, deliver for those shareholders quarter to quarter and meet their earnings targets?
It's a very, very good question, and if I knew the answer, I think I would dominate. I would be the corporate titan to contend with. But I think there are two issues there that I find interesting or give me hope. One is that there is a movement, among public companies and among some of the great leaders in Wall Street to move us away from the sort of quarterly earnings treadmill march and this sort of constant grind of meeting street expectations quarter upon quarter upon quarter, which makes it very challenging to plan for the long term and invest for the long term when you have this sort of treadmill mentality. And I think that there are certain companies that have done that well, and but that work needs to continue, and that sort of re-education of the market needs to continue. That's one element that gives me hope. There's a second movement, I guess, in the market, which is that I think, again, investors, just as customers, care about the value systems and the long-term thinking of companies that they support and back. And again, these are small changes that will happen over.
All right. While Maya's frozen up there, maybe I could switch over to Mark and we can back to Maya. But Mark, you used to run a publicly held company, and one that actually did some of the things Maya was referencing in terms of Salesforce. As I think about Salesforce, it's very well known for really strong commitment to employees and culture, as well as good leadership with regard to offsetting its emission. Your boss, Mark Benioff, has been a real champion of the Trillion Trees initiative. How has Salesforce navigated the challenges of being a public company while also following in your and Mark's lead to really do right by the planet?
Well, sure. I'm glad to speak to that. The first thing I would say from my standpoint is there was a lot of discussion about quarterly targets or not quarterly targets. To me, I think I'd actually like to reframe it a little bit, from my own context, and that is that as President and CFO of Salesforce for many years, I always felt the obligation to help first align my board and the leadership team around a long-term plan. And Jenna, I'm super in admiration of your philosophy for the long term. I wrote an article about taking a longer term view, I think can create tremendous value for all the stakeholders. So I think the first thing is there alignment with the board, with management on the long-term plan? And then, how that actualizes itself, it happens day by day, quarter by quarter, year by year. But first to get anchored on what we're trying to do for a long-term plan to achieve all the needs that are going to contribute and really create a generational company and really address all the stakeholders. And once that's done, then I think you can have a discussion about quarterly. I've always said that I don't want to focus on short-term execution to a short-term plan. I want to focus on short-term execution to a long-term plan that really is well aligned to what's needed for all the stakeholders. And that's the way we've thought about it, number one. Number two, I will put out to you, I believe, and I've talked to our investors for years around values drive value. And our values have been very clear from the beginning. And they've included stakeholder capitalism, not in the last 2 years, 5 years, 10 years, but for 22 years. And our stakeholders of employee and customer and partner and community and shareholder and the planet have been center to the decisions that we make. And we believe that that has really oriented us and oriented our communications over the long term and our actions. Even during the crisis, when we were trying to stabilize and take care of our customers and everything, simultaneously in taking care of our employees, we were trying to find 60 million pieces of protective gear to help the hospitals across the United States. Because we knew that even during all the other stresses of trying to take care of things during the pandemic, we needed to have values driving value. So that's the way I think about it, and hopefully it gives a little context.
That's really interesting. Values drive value. Maya, you froze up. I would love to come back to you. Actually, you were talking about values.
Yeah, no, I was going to say that.
Lost you, yeah.
Yeah. Do you hear me okay? Perfect.
Great.
Well, one of the other points of hope that I have is that I think increasingly investors and just as consumers are going to start caring much more about the values of the companies that they consume from or that they invest in, and the whole movement around sustainable investment, and not only sustainable investment, but thinking about ESG factors for companies, increased reporting requirements, et cetera, is all to the positive for helping companies think long term and about not just increasing their profit or maximizing profit, but being great corporate citizens, being good to their employees, and being good stewards of the planet, which is all what stakeholder capitalism is about.
Thanks. Manny, what are you seeing up there?
Yes, I'd like to comment on this. So, because I do see some changes, Mike and the team. If you would have looked a few years ago, it's almost an oversimplification to say that public shareholders have a more short-term orientation and private are easier to do long-term. Now, there has been a meaningful trend in capital markets over 2 decades now of a larger shift of capitalization is through private markets, and that'll probably continue. It's also easy to say historically that sustainability initiatives are inherently have a higher long-term time horizon for the benefits to outweigh, to have return on investment and investments you make. I'd say our observation is, those are both not necessarily true to the extent they were. You can have long-term oriented public shareholders based on values, and you could have short-term oriented private investors who might play the role that the activists would play. And so on both sides, it's not necessarily private is going to make it easier to make these investments. And I'd like to see that there is part of Friedman that comes out. There are natural forces that bring these to equilibrium. And increasingly, we are seeing pretty meaningful sustainability initiatives that can create, near-term economic return. And so if you have that portfolio, you could have the 100-year time horizon, the 10-year longer hold horizon. But at the same time, if you do enough things that have some short-term benefit, which have shown up even in the last year because of the pandemic, I think we'll just have a better balance.
Great. Well, I think it's always great to think about these things in terms of win-wins and opportunities. And at the same time, I'd love to just hear any reflections from you all on just places where a company that either your company or one that you've observed really had to make a trade-off, and where push came to shove, they chose to do the sort of environmentally sustainable option. Something that comes to mind, obviously, is just, and Jenna, I know that Patagonia wrestles with this, but just, plastic. and how do we get off of plastics?
Yeah, plastics are a really tricky one. They provide the opportunity for synthetics that can be high performance products, and yet really investing in longer term solutions, looking for ways to eliminate plastics from the world at some point, maybe use them all up and then keep them in circularity. I think you have to be thinking longer term than just how do we solve the plastic pollution problem, but how do we utilize plastic and then change behavior around consumption and the way that we have a relationship with products in general. And what does that look like as products remain in the marketplace for longer and longer and become more like an heirloom that gets passed down and passed around, and there's a strong value for it. Then we start to kind of reduce manufacturing and really look at some meaningful progress on carbon emissions.
Manny, you got a comment there?
One of the things I mentioned earlier, we've been doing some work as well with a group called Alliance to End Plastics Waste. And it's yet another example that if you don't think of this as trying to create competitive advantage and watching literally competitors, customers, suppliers in the value chain collectively try to reduce plastics usage in an unhealthy way, even the manufacturers. Those are the kinds of things that you wouldn't have seen years ago, and that does give me optimism. And then as you ask further examples, so many companies in the world right now are making choices on, as simple as almost a public relations announcement. We will be net zero carbon by pick the year, 2030, 2040, 2050, by industry, by company, by country. And the ones who are really choosing to make those choices, if you're an oil company who lives in that world and you make that announcement, as some oil companies have, it is a tough choice, because despite everything we talked about earlier in public and private shareholders, there are still short-term investors out there, and you can kind of almost predict with this statement what's going to happen to my share price tomorrow. We've seen examples of that even in the last year, and so the courage of what Mark said, of the senior management and the board committing we will do this and the right thing, and hopefully we will bring our shareholders along, and maybe change them over time, is going to be the issue. There is a courage involved component to corporations taking stances right now.
Interesting. Mark?
I might add I also think that I agree with Manny's comment, but I also think the ability to make these broader contributions to your stakeholders doesn't mean sacrificing delivering return on investment. I think every business is different, and I think Manny made a really good point on that. And not everybody can do exactly the same thing in every industry and every geography around the world, but we all can do something. And all of us doing something can really change the flywheel of momentum and progress and everything. But I really feel, and I think Manny was touching on this a little bit, I wouldn't lower the bar for return on investment, even though one is addressing the broader stakeholders. I think it creates that, what do they say? Necessity is the mother of invention. We, release the amazing ingenuity of great women and men that are working in a team together to go meet all the needs, not one of the needs. And I think it's about a durability of a company and a durability of creating shareholder wealth as well. When you have a company that has great relations with its customers, great relations with its employees, a great track record in its sustainability, a great track record in its community, a great track record with its partners, I don't see that at odds with Milton Friedman at all. I just think it's a broader based view of how to deliver something that's bigger, but it's not monofocused. It's just one thought to throw out there.
That company sounds like a great one to invest in.
Well, I'd ask Maya's comment on this. One thing I admire about the TPG Rise Fund that she leads is the concept of impact investing, you could have at least presumed that there was a trade-off on financial returns, and at least for what I've observed, that has not been the case. So maybe comment on that.
No, absolutely. If I can just say a few things. One is to augment Mark's comment that there is something to be said for discipline, because one way that you could look at it is, let me spend $1 billion to put out one output of social or environmental good. If I could spend $100 million, regardless of whether that $100 million is coming from commercial capital or philanthropy, to get that same output of good, why not go for that, greater productivity or greater efficiency? So I think that regardless of where the capital is coming from, whether it's philanthropic capital or commercial capital, thinking about, what am I producing here? Is it delivering the good that I want to see? Am I doing it efficiently and productively because resources are limited? That's definitely the better way to go. And within the impact investing world, which we can talk a little bit about, there's indeed a spectrum. So there are certain investors who cannot relieve their duty to generate market-raised returns. There are philanthropic investors who can focus on impact first. But in all cases, I would say that thinking very carefully about what you're funding, and thinking and being disciplined and relying on research and evidence to show that what you're funding is actually generating the good that you want to see, is a critically important discipline and skill.
Yeah. And so, Maya, on that, obviously there's operations like the Rise Fund that are explicitly set up to seek impact. What are you seeing from the broader investment community? Is there pressure from, where's the pressure coming from? Is it this sort of firms like or funds like yours, or pension funds, all the other big players in the markets these days? How are they playing in this space? Do they care? Are they putting pressure? What do you see?
Yeah, so I'll say the market has changed dramatically over the course of the last 5 to 10 years. 5 years ago, when we raised the first Rise Fund, we really had to convince and bring along institutional investors like the big pension funds that run teacher pensions in the state of California, state of New Jersey, the European pension funds, different big institutional investors. They were very curious about sustainable investing. They were very curious about impact investing, but nobody had actually really allocated any dollars to it because they were concerned that they weren't going to generate the financial return that was required of them by their constituents. 5 years forward, they're actually starting to put pressure on fund managers like myself in our what I'll call regular funds to make sure that we're adhering to ESG principles, which is critically important. They care about diversity, equity, and inclusion. So there's now, extended pressure from them to do the right thing by your companies and be responsible stewards as you invest, be responsible stewards for society and planet. But now they're actually also becoming more proactive and saying, we want to actually invest in funds that have as an end goal, not just generating financial return, but delivering environmental or social good. And so that market is starting to grow, and it's really, I think, taken hold. It was starting to take hold before the COVID environment hit us. And since the COVID environment hit us, concerns about the environment have been paired with concerns about society and delivering a just society. So investor pressure is really important. On the other hand, I think the way that companies operate and the fact that customers who buy, if you look at Patagonia's customers, for example, and Jenna can speak to this, they care about the values of the company, and they're using their dollars to vote with companies who effectively they agree are responsible and intentional and purposeful and good stewards. So you have two forces that I think are to the benefit of planet and society, working in today's market.
Jenna, what do you think of that? What is it what kind of how do you think about your customer base and what kind of pressure, or how do you think about serving their sustainability needs? Or, I actually read that there's some the sort of corporate logo business has become a little bit controversial, where, I think North Face recently decided they didn't want an oil company to give out, swag to their employees with their products and their logo on it. But so clearly there's a lot more people buying Patagonia clothes than just the hardcore environmentalists. But tell us about your customer base and how does that function in your thinking?
Yeah, this is such an important part of what we think about. And as I was listening to you, Maya, I was thinking about how all of our businesses, no matter what sector or business you are in, at the end of the day, you're providing a good or a service for a customer, somebody on the ground. And what Patagonia has always done really well is we stay very close to the ground. We are a part of the groundswell. We're listening. We're really trying to reflect the values of people on the ground, the citizen activists. And allowing the brand to evolve and to feel their pressure and their demands on us as a company. And I also think it's worth mentioning that we certainly feel that at the customer level. That is what drives our business: strong loyalty, strong conviction, and alignment with our values. But we feel that pressure really immensely from our employee workforce as well. We have hired citizen activists who believe and are very loyal to the work that we're doing. And every day when we come into the office, they hold us accountable. They put pressure on us. They expect us to be living up to a really high bar. And between the two of those, we're able to bring, really exceptional product that is not only really high quality, but that is made in the most environmentally friendly way possible today.
Interesting. That comment about employees as a stakeholder was on my next question. So I'm glad you brought it up. Obviously that's a really big thing that a lot of companies are, especially ones that articulate their values, and then people self-select into those companies for those values. And it's an important stakeholder to further those. I'm interested, Mark, what are you seeing on that? Mark, your company, obviously, you've talked about values being a big part of the way you've run Salesforce, and I presume you have a lot.
Yeah, definitely. It's super important to us. I just want to say the Patagonia, model and the products, we love them. It's very very akin to a lot of our ethos there. So I just have to weigh that in. I think in today's world, it's more competitive than ever to have the best people, and people drive companies. There's just no question. And that is the secret sauce of every great company. And employees want to be at companies that are not only successful, and so delivering on all the classic measures of success, if you will, but they want to have companies that have values that are mission-led, mission-driven. And, I think that is, not lost on us. That's been part of the ethos of our company for 22 years. And of course, the environment is something that people care immensely about today. And, what I think, to your point, is to really create a company and to attract the right people. People, all want to see people get serious and really stop admiring the problem of climate change and stop admiring the need for sustainability and to instead activate into action. That's what people want. That's what, that's what I see. And I think companies, business is one of the greatest platforms for change. And you're seeing that. You heard the great story of Patagonia. You're seeing what Manny's doing and what Maya's doing. And there's so many companies where the expectation of a modern corporation to attract and retain a great team, they have to address the broader needs of society, and that includes sustainability. It's just you can track it mathematically in assets under management. Maya could give us a class on that probably, of how the expectation for ESG is going up. And so I feel like, we need to do and address that. And I feel like the economy in the world is going to be reshaped in every way, from agriculture to financial services to consumer goods to, you name it, technology and whatever. And we all have a chance to help shape it in a more sustainable way. And I think that in this determining decade, I think it's really, really critical. I think that, it's not even like it's nice to have. It's just a mandatory thing, in my opinion, for a more durable company and in a more stable society, over the long term. And so I share a little story with you that really caught my attention. I, by the way, champion a lot of different sustainability issues regarding various items inside the company, and we have a great team and folks that do that. But we had created something called Earth Force, and it was an experiment. It wasn't my idea; it was a lot of good people's ideas. We had about 200 people in 2014. Today, our employee resource group is over 9,000 people. These are busy people. They have lives, they have families, they have things outside of work, they have children and this and that. 9,000 people regularly dedicating and volunteering in the community, not inside Salesforce, outside of Salesforce, to do something to help in this community. And that is where you begin to realize you're tapping into something that is very, very powerful on what employees really want in a modern corporation. And so, whether they're organizing to clean the local beach or to do recycling or to teach people about sustainability and educating people and having, just so many different examples that are inspiring. I think it's another example of how important this is, how passionate people are, and why it's critical for people, to get involved in my opinion. And so, I think no one can do it all. And there's not one formula for everybody, but if all of us get involved and do something, I think we would really be surprised at not only the progress we can make, but the mindset shift that does, that this is a topic of our age that we have to address. I think if we zoom out again, I think it's from the Earth Force metaphor, and really think that this is a corporation's time to rise to meet the challenge, to be on the right side of history and actually do something you can really be proud of over the long term. Notwithstanding, you have other stakeholders that you absolutely have to deliver on. And I think that we shouldn't lower the bar in any of that, but we should raise the bar on what we're doing in the area of sustainability. So that's why we at Salesforce, we're looking at every opportunity. I really like what Manny said. There used to be a sustainability strategy. Now there's a strategy that just happens to incorporate everything you're doing. Needs to be thinking about sustainability. We decided at Salesforce Tower that Manny's in right now, to create the largest black water project in the United States of America in a commercial building. We're the first to have this kind of a water recycling program in San Francisco. It is our obligation and responsibility in a state that has a drought to lead from the front. And that wasn't an afterthought. It's a thought in the middle of everything that we're doing. So Manny, I agree with the strategy side of this. So I think, in this environment, I just want to say, a last couple things. And that is, I think employees are demanding more accountability and more transparency. And so are investors. And so are other people in the stakeholders. And that's why today we released our 9th, not our first, not our second, not our third, our 9th year in a row of our Stakeholder Impact Report, which, by the way, as the president and CFO, I said, it's not enough to put that report out. When I put a report out financially, I have Ernst & Young audit it. We had Ernst & Young audit our report for years. We want to have the say and the do ratio be totally reliable. Trust is our number one value. And I think that this is what employees are looking for, Mike. This is what other stakeholders are looking for. And I think that's why we doubled down on our Stakeholder Impact Report. That's why we doubled down today. We announced, we created, we have our CRM, which was called out, but we also created a sustainability cloud to make it super easy for companies to do carbon accounting. Very easy. Not months of effort, like hours of effort. And so we're trying to provide that even in our product to try to, contribute back into the society. So whether it's Earth Force in my metaphor, tapping into our employees, or whether it's corporations rising to meet the challenge, all of us can help. And I think the time is now for us in this determining decade. That's what I would say. And it's very much what the employee wants, in my opinion.
I'm really sort of blown away and fascinated by this idea of an audited sustainability report, because, and I'm interested, Manny, Maya, Jenna, chime in on this, but it would strike me that as I can't remember, I think it was Mark or Manny said, putting out the report, how do you believe? How do you know that it's real? Yeah. It's real impact. I don't know.
Mike,
please, Mike. Go ahead, Mike.
No, I just to supplement what Mark said. So we put out an impact report as well within the RISE Fund. We think it's critically important to measure because you need to if it matters, you need to measure it to make it matter. And KPMG does the audit of our report. They call it an assessment, right? Because it's not financial statements. But we think, just like E&Y doing this for Salesforce, it's critical to have third-party objective reviewers to build credibility. And to supplement a little bit of the stories, one of the things that we measure or we calculate out is what is the impact generated by each company that we invest in. Again, we don't just do climate investing, we also invest behind education and financial access and healthcare and other categories. But if we look at the climate investments that the RISE Fund has made over the last 10 years, the companies that we have invested in have averted 48 million metric tons of carbon since the first date of our investment. That is the equivalent of taking 10 million cars off the road. This is just, roughly 10 investments, 10 to 15 investments out of the RISE Fund. So if we can accomplish this with 10 to 15 companies in RISE, imagine what we can do globally and what enterprise can do if they set their minds to it. The companies that we invest in are doing everything from utility scale solar in Latin America and Europe. We have the largest solar energy services company in India. We have a company that is conserving 6 million acres of land in the wilderness of Africa with ecotourism to bring also employment to rural communities. We have two of the leading plant-based protein alternatives, one doing an alternative to pork in Asia called Green Monday, one doing an alternative to chicken in Europe coming into the US and Asia called Live Kindly. We have data and AI companies that increase energy efficiency. We have independent credits. So, these are the types of companies that we invest in, and we measure they do every year, and that is critical.
If I could add, Maya, I so relate to what she's saying. It is critical. And the thing that I would say, in my opinion, is if you can measure it, then you have accountability. If you have accountability, you can do empowerment. Accountability is the beginning of empowerment. And if you can empower, you can harness the amazing capabilities of great women and men. And so I think her point of measure drives accountability, accountability drives empowerment, empowerment starts to change the world. Just a thought to add on to her comment.
That's a bold thought.
One more comment on this one. It's measuring it, reporting it, and having it be trusted and audited.
Mm-hmm.
And one of the initiatives, actually, Mark Benioff has helped support and lead. There's a very large number of companies that came out of the World Economic Forum that are committing to report on sustainable development goals around planet, around prosperity, around people, and to watch the big four accounting firms all collaborate in all a pro bono way that we will help set the standards that we expect you all to sign up to. Mm-hmm. And you have to commit to publish it. And so following the lead of companies like Salesforce and stakeholder impact reports, once it's audited and out there, I think that actually helps, back to our investor discussions earlier.
Yeah.
And if everyone goes on in the same way.
I would love to just kind of go back to the discussion about customers for a moment and put a little bit of context for you, because a lot of what the Nature Conservancy does these days, of course, we still buy a lot of land, but a lot of what we do, as your colleagues at Bain will attest, Manny, is we're really grappling with how do you make land use, which dominates most of the planet, the ocean right now, production of food, fuel, and fiber. How do you make it more sustainable? And one of the issues we often come up against is just this sort of axiom that's been proven in a lot of cases, that the customer by and large doesn't care. They won't pay extra. They won't even pay a penny extra for like a can of tuna that you can guarantee was sustainably harvested or whatever. I would love to kind of hear from you about just consumer insights. And Jenna, maybe coming from you, just because you have, back to your comments about consumers. What do you see on that front?
Yeah, I think what I would say is that Patagonia really tries. We are fine to be in the position of being somewhat of a guinea pig and testing and trying to find solutions that can scale both up and down, right, within different sectors and different industries. And I think if we've proven anything over our almost 50 years of business, we've proven the exact opposite of what you just said, that actually customers are willing to pay more, and that when you are transparent, when you build trust and loyalty, as Mark was speaking about with auditing, you have to put the effort into being genuine and authentic and earning trust. And when you've earned it, there is a large group of people out there that are willing to pay extra and want to be part of doing the right thing. People actually care really deeply. The climate crisis is in front of everybody's face today. Everyone understands it. They don't totally understand the ways in which they can engage, and they should be changing behavior. But as they learn, they respond really quick and are absolutely open and receptive, and again, willing to kind of invest, especially in products we're finding.
I'll jump in here too. Segmentation matters, and we start with a B2C consumer versus a B2B consumer. So what you've just seen is, as Jenna will attest, the brand and customers often identify with brands. Brands have their own issue of, is that a good thing or bad thing when you're branded? The size of the segment that cares enough that they will move their buying behavior and make the trade-off on cost has been growing. And so companies that directly address that particular segment, like Patagonia, and if you can expand that's sort of goodness. Now there are large other customer segments out there that will make their choice based on what is literally, and you could, what is the most cost effective, what is the lowest, what's the most convenient, what's the prettiest. And so you'll have a multifaceted brand strategy, and even the world's largest corporations are building, whether it's food, it's attire, an increase in this particular domain. There is a difference also between the B2B customer, which you think about that. B2B customers are either companies making buying decisions, or they're individuals at companies making buying decisions. And somehow we've seen the psychology of an individual who's making a choice on what airline to use, what hotel to use, what product to buy when it's business consumption, might make their choice in one way versus when it's out of their personal expense, and so I think that the message in both is that the size that actually cares about the sustainability of the product or the service has been growing, and so part of there is part of the strategy of company that figure out where do we play and how broadly do we play, and I expect that trend to continue, and hopefully post pandemic, because one of the issues that there were pros and cons. Maya alluded to this earlier. What happened to the pandemic? You were making trade-offs in some cases because of social issues or safety issues. we started using plastic bags in groceries again, and so on. But this is it's a growing segment, and so we believe this, and shareholders will follow customer behavior.
They will, and if I may just add, I agree with your commentary, and I really relate also to Jenna's point. I think, when you really understand the customer and you build loyalty, it's like you build a community, and it's something really, very, very special, and it's hard to kind of describe. But I can tell you guys, and I think segmentation is exactly right, Manny's point. There are some people in different situations have different situations, but I think it's so powerful to understand the customer, and I also think the world history of serving a customer, there's example after example where the customer could not fully describe what they wanted, but those that had an imaginative understanding of what they needed would offer them something that they didn't even ask for, and all of a sudden you change the world. You have a Patagonia, you have an Apple computer, you have, whoever your favorite is in any segment of the world. The old saying is that if you ask somebody who was driving a horse and buggy how to improve it, they would describe it as opposed to an automobile. It's just, how do we have the imagination and factor in sustainability into it, I think is important. And Maya, I just want to say before you jumped off, I really related the comment on your measure. And my view is measure equals accountability, accountability equals empowerment. I really couldn't agree more with what you said.
What do you, just while we're on deferring to Maya on this one, from the investment standpoint, to Mark's point, sometimes maybe a customer doesn't quite know what they want. Steve Jobs is famous for that kind of mindset. But how does an investor think about that kind of pitch from a company?
Yeah, it's very varied, and sometimes the company has to educate the investor. So there is no standard answer to that. But and honestly, I do think we are at the education phase still, because there isn't one standard way or one benchmark to measure values or doing good, and so part of it is the company having to bring the investors along, or we as fund managers we know our investors care about it, but they don't know exactly how to describe it, so they have to trust us to bring them along, just as customers have to trust the companies that they buy from, to bring them along and to be the stewards of the doing of the good.
I would jump in just really briefly, because I think this conversation is so fascinating. And as we think about investors, I also feel that way about companies and consumers. And I want to layer on one more point to the conversation we were having, which is, yes, customers will pay more in some cases, but it's also up to us as businesses to have sophisticated business models that educate the customer along the way, just as you're speaking about, Maya, and educating the investors. And sometimes that means taking a shorter margin for the short term until we can scale a technology and be able to offer it at the same price. I think the largest success stories at Patagonia have been when we have worked hand in hand with our supply chain partners to be able to dramatically reduce the impact of a product and hold the price the same, so that the customer doesn't have to make a choice about choosing the environment over a pretty color or a nice fit, but that they can get both of those. And that is the win-win that's, really hard to achieve, but certainly the Holy Grail.
Well, Holy Grail and win-win, that's a great place to end this terrific panel. I just want to say thank you to all four of you. This was really enriching. I really appreciate your time and your insights. And Maya, Mark, Manny, Jenna, thank you.
Thank you very much. Yes.
One of the things that I love about Earth Day is that it invites each of us to really consider our connections with nature. And we all have them. I mean, we need nature. So when you think about yours, maybe you think of wild places far from the city. Or maybe you think about nature that's in your backyard, in your community. And we are working towards a future where nature is prioritized and considered and that our connections to nature are recognized. Thanks so much for joining today, and I hope that you'll continue to join us as we work towards this future.
When I think of Earth Day in 2021, I'm filled with a sense of urgency and the belief that we all have a part to play in restoring balance to our beautiful planet. Nature is our solution, and protecting it must be our mission. For me, Earth Day 2021 represents a most urgent call to action. We simply cannot delay any longer. Our planet needs us now more than ever. Thank you to TNC for all that you do and for continuing to fight for the future of our planet, for all our futures.